Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne. That means we're going to be diving into mostly the precious metals charts and discussing a bit of the discrepancy in terms of price moves between gold and silver recently. Gold dropped down to $23.50. Silver dropped the whole way down to about $27.50. Both are rebounding in the last couple of days and even stronger today. Jordan is the editor of the Daily Gold, which we will link to in the show notes. Jordan, how are you viewing the different action that we're seeing between gold and silver and some of the levels that both have rebounded off recently?
Hey, Corey. Yeah, typically in a bull market for precious metals, but this is really an unusual situation because you have what looks to be a bull market in gold and silver. Gold has just come out of this very significant breakout, and then you get this sell-off in which silver has encountered quite a bit of selling at 32. Now you have significant technical damage. So that's never a good sign because in a real gold bull market, gold makes a huge breakout, and usually gold will, I don't want to say carry silver higher, but what I should say is the metals move higher and then they get real momentum and silver outperforms gold. And we're looking at gold now, and we did get the rollover in a contract. So the new contract looks like it's really close to making a new high. But if you look at the spot market without the rollover, there's about 40 bucks, 40 or 50 bucks to go for gold. So uh, gold is in new all-time high territory, but there's just this technical damage in silver. I don't want to read too much into it because it looks like the Fed is going to probably start cutting rates in September. So that's not a market where I'm trying to short gold or silver. I'm happy with the stocks I own, and I still think if the Fed's cutting from September and they cut a couple more times after that, probably will be good for gold and silver. But we definitely want to see silver bottom out here and strengthen because it's not a good sign for the momentum of the sector if gold is the one leading and silver has this technical damage. I don't want to say it's bearish right now, but you're not going to get a rip roaring move in the sector and then in the juniors when silver is underperforming this way and has this much technical damage. But, and I'm not trying to talk circles around everybody, but at the same time, if the Fed cuts, I mean, it looks like they're going to cut, so that's lower real interest rates. So you probably could have a bit of generalist money start to come in, and that could pull the metals higher. So we'll see. I mean, here and now, you have this technical damage in silver. We'll see how it plays out. Doesn't really change my strategy about what companies to pick. You got to pick the quality companies and avoid the ones that are really dependent on silver prices and gold prices.
Well, Jordan, let's just dig in a little bit more technically to silver. I know you said you don't want to make too much of it, but it's not nearly as bullish of a chart as gold, and it's not just rolled over, it's kind of fallen apart here a little bit. So it's not a bullish looking chart. It is from a longer term standpoint, but it's for the last couple of months, it's been pretty bearish. Some people have noted that it's possible it double topped in the 32s. It doesn't look like an exact double top though, but it's down below some key moving averages, and it's not down to that 26 level that was a line in the sand, but do you think it would break down below 26? Or do you think it'll find some footing here if gold takes off? Or do you think it's acting more like a base metal because it really rolled over in tandem with copper and a lot of the other base metals?
Yeah, I think if gold takes off and it's going to run to new highs, that should pull silver higher. I mean, it's trading below 29 now. Can that pull silver up to 31 or so, or maybe that resistance at 32? Yes, I could see it happening. I do think it's going to hold 26. Commodity prices, they've kind of rolled over. They don't look so hot, commodity prices as a whole. So that's generally not great for silver. I wouldn't be that worried about it if we get steepening in the yield curve and it looks like we're going to have a recession at some point in the fall, maybe, or the winter. In that scenario where the Fed has to do lots of easing, gold will probably continue to do well, but at some point, it'd probably pull silver higher and silver would come back and then start to outperform gold. So, in that economic scenario where you actually have a recession and the Fed has to do quite a bit of easing, That's the best thing for gold, and that will pull silver a lot higher soon enough. That's good for silver. But I mean, if we're just in a general slowdown, it's definitely not good for commodities and not good for silver, because if you're in a general slowdown, but not a recession, the inflation plays will sell off and gold will outperform silver. So at the least, that could be what the macro signals are telling us right now, that it's either that or, we could slow down into a recession. So it's one of those signals. And so I think it's so important to understand those things, because just looking at the chart without having any sense of where the macro is going, I'm not saying you have to be an economist, but you can look at the chart, you can look at other ratios, look at what the stock market's doing, look at the yield curve, is there steepening? If you look at things like that, you can understand the macro message that's coming out of the market.
Well, as tough as silver has had it, a lot of the stocks, at least the gold stocks, and some people correlate silver to stuff like GDX, those have still held up relatively better. The majors are doing okay. We all know the juniors are struggling, but they've been struggling forever. It seems like GDXJ recently went through a couple week correction and also has bounced, not nearly as close to an oversold condition, didn't even touch the lower Bollinger Bands on the way down. GDX looks still like a fairly stable and strong chart even after that recent correction. What are you watching on that chart?
I'm watching no specific levels right now. You recall a couple weeks ago, or maybe 3 weeks ago, we talked about the miners were starting to lead. You had this strength of the advanced decline line. Then you had this big sell-off. But even since then, the miners have rebounded. So there's less technical damage in the miners compared to the metals. So that's a good thing. But I'm not watching any particular levels in GDX and GDXJ. I mean, I see they're trending higher, and just that there's less damage in those compared to gold and silver. And interestingly, the silver stocks, or at least if you look at the ETFs, SIL, SILJ, those have been holding up much better than silver. So that in itself is a good sign. But again, that's a tiny market. I would prefer that there be less technical damage in silver itself. But the miners are acting well. They're in uptrends. Not a ton of technical damage recently. So those things are good signs. And I'm just thinking about, okay, what are the undervalued companies out there? What are the ones that are really undervalued that there's a good chance they're really going to move higher if gold and silver kind of go sideways here? I think that's what we need to be looking at. There's just too many stocks that are dependent on having to be in this rip-roaring bull market. I mean, gold and silver having to be in a rip-roaring bull market. So that's my strategy.
Well, Jordan, could you expand on your strategy a little bit, as far as you've made the point before, there's a difference between undervalued and what is cheap. And the undervalue really plays into the catalyst coming up for the company. So what kind of things are you looking for in a general sense in companies to determine that they're actually undervalued versus just cheap?
It's based on what kind of value they have at current gold and silver prices. You could say, what's their value at 22 or 2300 gold? And for silver, it would probably be, I mean, I guess you could use 28, maybe even 26. So it's their value based on those metals prices. And when you're looking at a lot of stocks and companies, you just have to remove gold and silver prices from that to really get a sense of the value out there, because there's just way too many that they're completely dependent on gold and silver being in a bull market. And so I'm trying to avoid those companies at this point, just because we're in a really unique situation where the rip-roaring bull markets we had in the past, we had secular bears in the stock market. So that's what's holding back the sector at this point. Yes, gold and silver have moved higher. The miners look good. There's not a lot of technical damage, but it's hard to see. And yes, they can move higher because the Fed looks like it's going to cut rates, but you're not going to see a rip-roaring move to the upside or this huge impulsive advance unless things change with the stock market and the economy. And because of that, if that doesn't happen, you don't have a lot of money coming into the sector. So you don't have tons of money coming in, therefore it's not going to trickle down to the juniors. And so I'm just focused on, okay, what companies have the most fundamental quality at present metals prices and then upside potential at the same time. So I'm trying to merge those together. And I'd encourage the listeners to go to thedailygold.com/premium and really consider subscribing to my newsletter. I know I'm scratching my own back here, but company selection is just super important. And too many investors out there, they're like 80% of the reason they buy things is, oh, I think gold and silver are going to go up. But then they're buying things that don't necessarily have the leverage that they think they'll have. Like a lot of these exploration companies, like they don't have like 3 million ounces or 5 million ounces. Like they don't have any leverage to metals prices, at least not yet. I mean, you're gambling on drill holes and hoping they're going to make a big discovery or grow a deposit. And I mean, that's all fine. That may happen. But those are the reasons you have to own those stocks, not because you think, oh, well, if gold goes up, this is definitely going to go up. Like we're not in that kind of market yet. And you're not going to see that market until you get some kind of crack in the stock market and the economy first. Because if that doesn't happen, you're not going to have enough money coming into the sector. So that's why you have to really focus on company quality. And I'm not necessarily saying, oh, you just have to buy like the biggest, safest juniors. It's not necessarily what I'm looking for. Again, just looking for anything that has a really good value at present metals prices, because if that's the case, then the company can still do well if metals prices don't rise. And if metals prices rise, they'll probably do really well. So you're helping yourself on the downside at the same time.
Yeah, that's fair, Jordan. Some of these stocks with that protection, right? The more solid stocks, whether they're outperforming the market now or not, I think that's always a good strategy. But you are right. We are in more or less kind of a different market right now until we do start to see a big inflow of capital. Enough said. We'll post a link to the Daily Gold website. People can sign up for your premium subscription, see what stocks you're looking at and some other characteristics. I don't want you to share too much information. I do have more questions for you, but maybe I'll save those for future interviews, and now everyone can move over to your site and see what you're offering. Jordan, thank you, as always, for your time. We'll hopefully chat again next week.